Alright, yo, what's going on? So I'm just making this video today. You can see by the title of the video is basically my strategy. A few of you were asking in the comments and also DMing me privately, kind of explaining a breakdown of my strategy. I'm not gonna go like too much in detail, obviously, and like in depth and the ins and outs and all that stuff. It's just gonna be more of like a fundamental kind of basis type explanation of what I do. Right. First of all. I want to talk about this right now, which actually kind of has to do a little bit with my strategy. So right now we see the market just open. It's currently 4:30 p.m. Pacific time. So it's at 4:35, 6, 7. So 7:30 New York time, right? But basically, and then for those of you that kind of know, this is the majority of the gist of the strategy. We'll see something like this. Okay. All right. What is this? This is a high, or an external high, external liquidity, whatever you want to call it, right? So this is a high, so I'll kind of draw out a high, right? We could use this one too for future reference. Okay, so we see a high. Basically how it works is I'll overall look at if we're in an uptrend, downtrend, things like that. Okay, so here, uptrend, right? Because we got higher highs, higher lows, higher high, higher low, higher high. Lower low, but we don't break this and then create a higher high. Okay, but anyway, then we drop to the lower time frame. What am I seeing? Okay, so we had this. And then for those of you who know candlestick patterns, right, it's kind of like a shooting star. So we have a really big wick up. They try to push price up, 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 and then it closed. Didn't work. Okay, cool. And then I don't really see huge candles displacing above this, right? We kind of like see we have... Right, big candle, this, a lot of movement, big candle, and then we're starting to get smaller, and I'm seeing bigger red candles right on my screen, gray, okay, and then this was at 12 p.m., okay, and then this is when the market closed on Friday, okay, we left this fair value gap, okay, right here, actually probably should have fucking took this, then 3 p.m., right here, market opens, okay, fair value gap, taps on this fair value gap. See how we respect it? What do I mean by respect it? I mean we didn't close above it. We filled it perfectly. Let's go even lower. Cool. Oh, this is beautiful. This is basically my strategy, which I'll explain more. So first, we take a high, right? What are some highs? This is the high. This is the high. This is the high. This is the high. Right? These are technically highs. They're higher lows, but highs. Or lower highs. Okay, we start to come down. We create a fair value gap. Okay, on the somewhat higher time frame. Then we go down until we find an inverse fair value gap. Cool. Where's the inverse fair value gap? This. Why? Because this is a fair value gap, and then this. So inverse. Also note where we are. Beautiful. 50%. Of this range, right, from here to here, and then we're also 50%. Let me see where we are on this candle. Yeah, we hit also 50% of this candle, or this fair value gap. All right, so 50% of the fair value gap, or this candle, 50% of the range. Okay, you can see we come up, right? This is when we open at 3 o'clock, hit that 50% mark. Let's see if there's anything on the... Oh, even more beautiful, right? We go to the 5-minute. We have this fair value gap right here. It's 5-minute. So we come into it. Don't push above it. And then we start reversing. You could theoretically enter here. Right? Because it doesn't close above on the 1 hour. Then on the 15-minute, you have the inverse. So you could look something like around this. Stop loss is a little bit hard, and then take profit could either be these lows for a quick 2-to-1, or like around these lows. Right, I usually look for like 3-to-1, so it could be like around here, which you would have hit. Maybe you do this and then right, so 3-to-1 like that. Give yourself some room, let it play out, or you wait for it on the 5-minute. So after we come here and fill it to break this, so that's also what I look for. It's called change in the state of delivery. Where is it? I don't know what the BTM stands for. Okay, changing the state. Okay, once we start pushing below this, right, then you could enter around here. It'd probably be somewhere around here, because if this candle started pushing back up to here, especially if it went blue, trade's probably wrong. So then this would be a nice little kind of 2-to-1 scalp, right? But basically, that's kind of the gist of it. And that's what I'm just trying to show you is happening now. But in a general aspect, and that's on ES. Let's see, NQ, yeah, NQC, same thing, right? We have the fair value gap, except I don't think, yeah, there actually was. And this one's even better, this inverse. See, we really are respecting it, so it would almost look like this. Would have put it above this. And we go for these lows. 5 minute, maybe even a little bit higher, would have looked like this. Yeah, gone for these lows. Right, so this is like a nice 3-to-1 scalp. Okay, beautiful. So that's basically what it is, right? And then even too, I don't even think I noticed this. Yeah, well, and then SMT. So SMT. So basically, I'll look for. Okay, so what do we do? ES, we took a high. Okay, so I look for that. We take a high. Then specifically after we take a high, not only do I look for if we take a high, right here we take a high, but what do we take it on NQ? We don't take it on NQ. Let me delete this. We don't take it on NQ. Right, we create an SMT. Okay, so then I wait for that. And then I wait for break of structure. Right, we start going down. We create, so, right, higher high, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. But then do we create a higher high? No, we don't. Not only do we not create a higher high, we create a fair value gap that we respect, and then we create a higher low. So look, either we kind of come back into an order block, or to rebalance a fair value gap like we did, and on a smaller time frame, kind of look to enter here on a breaker structure, or we retest, we come back and rebalance. That's my entry, because I don't want to just go right when we break structure, right, or get a change in the state of delivery. I don't, especially on a low time frame. I don't want to just, you know, go short or long from there. I need more confirmation and more confluences. So that kind of like my trade. Yeah, so look, my trade on Friday, right, what do we do? Let me go to the hour. Okay, so we took, right, so we got a high right here. We took this high. This was at 6 o'clock. Okay, right, so I see 6 o'clock. We took this high. Okay. Also, too, notice my bias, because we are in an uptrend, right? You see, uptrend. Not just from a technical standpoint, but fundamentally, there's a lot going on, right? The Venezuela stuff. There's oil stuff going on. Trump just had that thing where he wants to have the government with the $200 billion for mortgages. There's a lot going on that's positive for the markets, right? Positive for a lot of U.S. companies. Okay, especially tech, NASDAQ, ES, S&P has a lot of oil sectors and gas, so a lot of things that are going to be like that. And then again, tech with AI technology, that's kind of always going to be a big thing. Guys, I don't just combine the technicals. You know, I study, you know, finance, economics, geopolitical, all those things, what's going on. I follow the news. I use a lot of fundamental analysis too, because yes, at the end of the day, you could see these, you know, liquidity sweeps, fair value gaps, this and that. But if you don't understand, you know, the companies within it and their balance sheets and why it's going up and down, and I'm not talking about why isn't because it's sub liquidity. So that's the algorithm. That's the people on Wall Street. But the real reason why they want to buy and sell, it's not because they think all these retail traders are going to buy it, or all these retail traders are going to sell. So let's, you know, stop them out and then do this and that, so that, you know, we can make price reverse. It's like, no, they're buying it based off of, you know, strategic investments and based on, you know, companies' performance, balance sheets, things that's going on with the news, the economy, all these surrounding things, you know, CPI, PPI, with the consumer price index, the inflation. I mean, there's so many different factors of why these investment banks and hedge funds are buying and selling. That's far beyond what our retail traders can comprehend. Yes, obviously it's a lot of algorithmic based, buying and selling, right, with their systems and technology and their advanced things that they use, especially now with the AI integration. But a lot of it is a lot more fundamental than you think when it comes to the markets. Mainly Forex, mainly stocks like Apple, Tesla. But again, what is, ES and NQ track? They track those stocks, right? Top 500 companies, NQ, NASDAQ, top 100 tech, mainly tech-focused companies. So anyways, so there's that. And then, yeah, so let me explain. Sorry, Friday. So we took a high, right? And my AMD model, right? What is that? We accumulated in Asia session, manipulated during London. So I usually look for accumulate, manipulate, and reverse. Okay. So we manipulated, but we never reversed. So I was waiting for that reverse. I was like, well, when's a good time to reverse? We took these, not only these 15-minute highs, which was also in a fair value gap. It was an hourly high in an hourly fair value gap, right? Not only on the 1, not the 3-minute, not the 5-minute, the 15-minute. I get that, right? Just like we had here, right, where we came and went down, creating a lower high and leaving a fair value gap. Same thing right here, right? We broke, but not only do we create a fair value gap, we created an inverse fair value gap, okay? So now, oh boy. Okay, so now I can see we're going, once this candle closed, and I traded this live, right? So I wait for this candle to close, and then the only reason, and I know I say wait for retest, I ideally should have waited for all this to happen and this to come back, and then once we got to here and started rejecting off this, then I should have entered here. But because my overall bias for the market open and the overall day and week was bullish, I knew that we were going to come down and sweep all these 5-minute lows on NQ and ES and then push up. So I figured we'd probably do that right before open. So that's why I even then went short here, okay? So what do I got? I got London manipulated above Asia. We took a 15-minute and hourly highs, right? Liquidity sweep, internal liquidity, whatever you want to call it. And then we start reversing, right? Change in delivery. This is technically a low. Technically, I like these lows better, but right, we go past this low right here. Okay, we create not only a fair value gap on the 15-minute, but on the smaller time frame, an inverse fair value gap. Okay, so I enter there. My stop loss was kind of like above here. I don't remember exactly. And then I targeted my initial. I targeted. What was it? It was a 5-minute fair value gap. Where's it, the 15-minute one? Yeah, it was a 15-minute. So it was initially here. I did 3 contracts. Or 2 contracts. My first take profit was going to be here. And I wanted to see us go all the way down to these lows. Not these lows, just because I wanted to get London lows. However, we did end up taking Asia lows, which again would have came from this short right here. After we did what? We came back and rebalanced. Just like I said here, you want to wait for it to not just break, but come back, rebalance, and then deliver, right? We did that here, so I went short. Okay, I took these lows. It started coming back up during a market open, actually. So 6:30, we swept, right? We fully swept all these lows, and we did create a little bit of a... no, we did create an SMT on ES, sorry. All right, we come back, rebalance, and then start delivering down. Okay, we did this, which what did this do? This took out Asia lows. Yep, this took out Asia lows. You can see this is Asia's session. All right, and then remember, we accumulated, we manipulated in reverse, but then New York not only manipulated below Asia, but manipulated below New York. And remember, from a fundamental standpoint as well as from a technical analysis standpoint, we were bullish, right? Uptrend is the technicals, and then all this news and good stuff that's happening is the reason why we're going to go up. Cool. So after we swept that, ES, I don't believe we had an SMT. Let me see. Yeah, we did. I didn't even freaking notice this. So here, right, this is Asia lows right there, and then here we actually went a little bit below it. So SMT, and then on the 5-minute, this is a pattern I'm trying to figure out a name for, but it's basically when there's 2 back-to-back candles like this. This is kind of, it's after a liquidity sweep or manipulation more specifically, and before a break of structure, where you'll have 2 big candles back to back of opposite color. So a big red and then a big green. Not engulfing. Engulfing would be one smaller and one's bigger than the other. These are both big ones. Okay, so I saw that, right? This just, after we swept all these lows, right, with my bullish bias, we start, I mean, this is a huge 5-minute candle, and after that 10 a.m. candle, right, 7 o'clock Pacific time is what you see on the screen, but after that 10 a.m., right, so that's that 4 hour right there, 10 a.m. candle, okay, I go on the highest time frame inversion, okay, 3 minute, I see the inversion here, right, we start pushing up, 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 and then I believe it was when, yeah, once we broke this candle and started going above it, I entered. So you see, it looked like around, it was like around here. And then my stop loss was below the inversion. And then I targeted these highs. Nice little 3 to 1. I definitely obviously should have held it. Actually, no, it was a little bit sooner. It was like here and then here. So yeah, 3 to 1. And then you saw the trade. I ended up, once we broke these highs, I ended up putting my trailing my stop loss to there, and then obviously we hit those highs and took it. But it's like, it's the same thing, right? We sweep liquidity here, manipulate, and then reverse. Same thing. Yeah, you sweep liquidity, wait for a break of structure, inverse first fair value gap, then inverse fair value gap, and then usually you just target. I know like 1 minute high is like 5 minutes. So this is the 5 minute high, but then again, we're waiting for an uptrend. So you had these five. So right here, you had these 15-minute highs, and then these 15-minute highs. Or you want to look on the hourly. These hourly highs. This was an hourly high. Yeah. And then I mean, look right now, guys. It's like I called these shorts too in the Discord. You can literally see me predict it. I said we were gonna come and either rebalance, fill this fair value gap, and then go back up, or we're gonna take a majority of these lows and then go back up. But it's like, guys, it's the same shit every time. You can see right here, sub liquidity, and then I guarantee, actually, you could probably see it. Another good example is, where is it? On the 1st of January. Actually, no, right here too. So, where is it? January. Yeah, right here. January 1st. So we get the accumulation. Okay, and then we manipulate above. And then what do? We start reversing. Here's this inverse fair value gap. And what am I targeting? Session lows, or the lows right here. Hourly lows or 15-minute lows. Okay, cool. So that was December. And then same thing here. Accumulate, we manipulated above, and then we came down, fair value gap. Was this the first? January 2nd. This one was the first, yeah, so there. But yeah, it's like, it's the same thing. Yeah, this one's the best, yeah, this is the best example. Alright, so yeah, we accumulated, right, Asia session, went below during London at midnight, then we came up. Okay, we took some of these highs here, and then what am I waiting for? We come down, inverse fair value gap, and then just keep going. Here, I think this one was more on ES for the second. Let me see. January 2nd. Alright, so accumulate, we manipulated above, and then here's this pattern I'm telling you, right, with 2 big back-to-back ones. And then let's see if we go on the 5-minute. January 1st. So January 2nd. Right? Look at that. So we manipulated. Right, so 6:30 we opened, came here, came up, which a lot of people would have took. Okay. Because you have the inverse fair value gap on the 1 minute. But then after we start reversing, why? Because we took out these highs. We took out London highs for New York. Beautiful. The 7 o'clock right here. That's that 10 a.m. 4-hour candle. We have an we have a fair value gap here, excuse me, and then an inverse right here. Inverse right here. You probably could have entered around here. Stops would have been here, and then you just would have took it all the way. Realistically, when it's like this, I would wait till either I get a 15-minute candle that's red or that's in the opposite direction, or I mean just like come here, and then look, it goes here, equilibrium, and then actually I did take this. Well, I take this initial short, and then once it came back to equilibrium and we didn't close above this, I continued short again after these lows. It was just like a quick little, I think it was like 2 to 3 to 1. I entered like here. It was like here. Yeah, like 2 to 3 to 1. So I mean that's just a strategy. Right, so break it down. We have liquidity sweep above or below, hourly highs, internal external liquidity, or session highs and lows, and then we get a higher low or lower high depending if we're up or down, and then a lower low or higher high if we're going up, and then we get a break of structure, fair value gap. On the smaller time frame, we get an inverse fair value gap, and then once we get that confirmation, either we get a change in the state or delivery, or we get I start seeing displacement, right? Like just the big candles, it just starts coming down. Then that's when I take my position, and I try to only do a couple contracts and give myself some room for it to go. But other than that, yeah, and I just target like hourly lows or 15-minute lows, and just want them to all get hit, basically. And yeah, that's all it is. Please check the Discord. I have it in my description. Also, my Instagram link. You can see the Discord in the Instagram. I called out a lot of these things. I'll post things either before they happen, the week before, or the morning of. I try and give you guys a heads up. Obviously, I'm not 100% right, and I'm not a financial advisor, but I highly encourage you guys to join the Discord. Follow me, Instagram, YouTube, all those things, so you guys can kind of see what's going on. But that's kind of a gist of my strategy. I know it was kind of quick and everything. It wasn't like a super breakdown. I'm going to break down each step of the strategy, like the fair value gap, the entry part, the bias part. But that was just kind of like a step-by-step. Like if I was just to take a trade live, and this was kind of the example. But basically on my Instagram, those are the kind of key things that I look for. But yeah, I'll see you guys Monday. Hopefully I could, I'll post a video every day this week, Monday through Friday. Hopefully it's more wins than losses, but again, you never know. You're never 100%. So let's see what happens.